is about by Global Risk Management. Today we have Arne in the studio. Welcome, Arne.
Thank you.
Today we're going to talk about oil, more specifically oil prices. And Arne, since last time, oil prices have been up some $15 from mid-December till now around $90. What are the main drivers here?
I think this is about a better demand outlook, so to speak. We've seen these PMIs where you go and ask companies how you're doing, new orders and all. They're actually starting to move higher. I think some of the concern about China is slightly lower today, and we are seeing, for example, the International Energy Agency. They do this monthly report. I think over the last 6 reports, in 5 of those, they have revised higher the demand forecast. I think there's an optimism about demand. I think that is the main factor. We saw in the beginning of the year very low interest rate, optimism that we could see lower interest rate this year. That might actually be changing now. That could be something moving in the other direction.
And if we then take a look on the other side and get another perspective, what about the OPEC and their role in this?
Yeah, exactly. Of course, there's a demand side, but also a supply side. As you say, OPEC, of course, plays a very important role here. I think historically, OPEC has a kind of a poor track record. They say one thing, and they want to produce this amount of oil, then to produce more oil. This time, it actually seems like they have been very good at sticking to their own quotas. Remember, they had this voluntary production cuts where Russia is also included in the so-called OPEC Plus, and they've been taking off quite a bit of oil from the market. Been doing this in Q1. They announced that they will extend it into Q2. I think it's likely they will extend it further into Q3 and probably also Q4. And if we look at the outlook for demand, a better global economy, and so on, it actually seems like we're going to have what we call a tighter market. They simply produce too little compared to what demand will be, and we will have lower inventories. Lower inventories, that is normally higher prices. And I think that is the driving factor now, and that's something we keep an eye on. Are we actually going to see these lower inventories? Because I think the verdict is still out a bit there. We see some inventories going down, but others are actually going up. But I think during later in the spring, over the summer into the autumn, I think we'll see a draw on inventories.
Sure. And then what about the geopolitics side? We have some factors also in this game here. We have the war in Ukraine. We have the Middle East war as well. And then we have the closure of the Red Sea.
Yeah.
And what role does that play? And how important is that for the market and what we see?
Yeah, geopolitics is unfortunately something that plays a role. And I'm afraid it's here to stay. If we start with Russia, of course, a lot of focus on the sanction, how much oil will Russia be able to export and so on. Unfortunately, it looks like they're able to export quite a bit more oil, but also a lot of focus on the ability to export, especially diesel. Remember, we have seen these Ukrainian attacks on Russian refineries. There's probably some 10-15% of their capacity offline at the moment. So I think Russia will have an issue exporting as much diesel as they did, for example, last year, and especially when we move towards the harvest season where they need a lot of diesel themselves. I think we'll see very little diesel export. That could also impact prices in Europe. Then, of course, the Middle East. I think it's important to remember there's no oil as such impact. This is unfortunately a war between Hamas and Israel, and there's no oil there, and the market is cynical. So it's all about the fear of this spreading. And of course, the key thing is here: will Iran be more involved here? We are recording this on a Friday ahead of the weekend. There's a lot of concern. Could there be a retaliatory that Iran will sort of attack Israel directly after Israel attacked this consulate in Syria, Damascus? That could sort of expand the crisis in the Middle East. The closure of the Red Sea, of course, means more demand because you have to go south of the Cape with the tankers, but it's also interfering in the supply chain. So geopolitics is certainly adding to prices at the moment. But it's also something, geopolitics can one day push prices up, but it can very quickly also disappear. And hopefully it will disappear because that will indicate that we have a more peaceful world.
Yeah. And then also we have seen that the gold have been breaking new heights. And almost every day here in 2024, And Bitcoin is also very close to $70,000 US. AI stocks are very much through the roof. Also, can you connect the dots here? Are there something speculative angle that we overlook in regards to the oil as well?
Yeah, I think there's a lot of money out there, so they're looking into where should I put my money. That could be one important thing to focus on. I think the geopolitical angle, of course, gold. You buy gold when you're afraid of geopolitics, but I think these speculative money, and I think at the moment, I think there's a sort of an asset allocation going on that you're a bit afraid of buying things that are related to high interest rate for longer. It seems like the rate cuts we're going to see in the US are going to be less than expected. So maybe you're moving out of bonds. Maybe you're moving a bit out of these AI stocks that have performed a lot this year, tech stocks and so on. And you look towards something that actually will benefit here now from a better growth outlook. And if the growth outlook is better, then we'll see more demand for oil. I think we're seeing a tendency now that investors, hedge funds and so on, are moving into oil, and they also like the backwardation in the oil curve, because remember the curve is like this, so they buy something in the future that is a bit cheaper, then they stay in that position and they earn a bit of money because they roll up the curve. So if nothing happens in the market, they will actually still earn a bit of money. I think we should have respect, because these are huge amount when these allocation things happen. So that's positive for oil, but it's not necessarily positive for the cracks, because they go into, they buy Brent, they buy WTI, they don't buy diesel or high sulfur fuel oils, and they only buy where you have a very liquid futures market, and that you have in WTI and in Brent, and to a certain degree it gets.
And then back to the prices, do you think that Brent will trade above $100 US?
Oh, that's a good question. I think if we look at the demand side, we look at what OPEC is doing right now, look at the geopolitical premium, there's certainly a risk of that we could see a test of $100. Will we trade above $100 for more like extended period of time? Could we talk about 120, 130? I think we were 150 before the financial crisis. I don't think so, because there's actually one important factor is that the OPEC countries, especially the Saudis, they have a lot of spare capacity, about 5 million barrels. So let's say we are starting to move towards $100. I think they will start discussing, okay, maybe we should scale back some of the production cuts, putting more oil to the market. Why would they do that? Because in their stupid, they would like high oil prices. I think they have a concern if they push prices to 100, 120 or something like that, that they will actually hurt the global economy. They could push it into a recession. And one thing we know, OPEC knows, if we go into a global recession, oil prices will certainly come down. So it's much better for them to find a balance, and I think the balance is somewhere here between 90 and 100. The global economy can live with that. OPEC earn a lot of money on that price, so I think we are in that range. Rest of the year, maybe between 85 up to 100. Maybe we will test 100, but not for an extended period of time. I don't think so.
Okay, so the short answer?
Yes, but only for a short period of time.
But only, yeah. Cool. I think that was all that we had time for today in these 10 minutes about. Thank you very much for joining in, and thank you for coming to Middelfart. And for the next time, we'll be talking about gas.